What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 9th of 2018. Well, folks, I hope you all are having a wonderful day wherever you are. Today, it's time for a daily update here on the DataDash channel, and as always, we're going to be taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of that as well, we've got some key headlines to go through. Today, we're going to be talking about the drama and the fear that is derived from the recent news in regards to the SEC targeting EtherDelta, the well-known decentralized exchange in crypto. And we'll be talking about what this means not only for EtherDelta, but for the broader market of exchanges, whether they be centralized or decentralized, and really explain what went on. In regards to traditional markets, we're going to be talking about the $4.3 trillion slash in valuations in Asian equity markets and what it means for the broader Asian markets as we're going into 2019. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the update. Now, I do want to clarify one thing, guys. As you probably noticed, I'm not using CoinMarketCap. We're using a new website called coinpaprika.com. And I want to be fair with you guys. As always, I'm always transparent. There's really two reasons for it. One, I am kind of doing the sponsorship or kind of partnership with CoinPaprika. And it's a way to help fund the channel. As you all know, I don't do paid ICO reviews and stuff like that. So I've got to monetize one way or another. And the second thing as well that's really nice about CoinPaprika, and the reason why I felt there was such synergy with it, is because the website is just like CoinMarketCap, if not way better, because they have a lot of tools that CoinMarketCap, even though they're the largest website in crypto, has yet to adapt to. They've been staying the same for pretty much 2 years. So I'm ready to try something new. I hope you guys will like CoinPaprika and be able to adjust to it. Not to mention, I like the night mode much better. So anyways, diving into the update, guys, just wanted to share that with you. Take a look across the board on crypto markets. Most things are in the red at the moment. Generally speaking, this is mostly due to the fact that obviously Bitcoin's continuing to correct from some of the gains it's had over the past 2 weeks. As we've had a slow, steady uptrend, we're starting to see a correlating correction as well across the board in crypto. Pretty self-explanatory, nothing too shocking at the moment, but nothing too serious to the sell side as well. So I'm not getting fearful in that regard. Again, it's still looking at the broader term statistics. And the fact, if we take a look at, as we take a look at the overall market view, again, still holding the general flatline here that we've had really back here since August. Volatility is extremely low. So I'd expect some serious moves here in the next week or so, whether that is downward or upward. I think more than anything, we have a very good chance that we're going to come back down to the rising support line on Bitcoin as we'll take a look in regards to the TA. But again, it's not something that I'd be fearful about or change my trading positions. I think it's going to be a small move, about $100, $200 if anything. And again, it still tests to this low volatility we have in the market. We really haven't seen much rises in volatility over the past few months. Going here, however, with market dominance, again, Bitcoin dominance still remaining relatively low. We'll go ahead and take it to the yearly here. Again, as you can see here, looking to see if it can possibly get back up and make higher levels on market dominance, but it doesn't look like it. If we take it to a shorter term time frame, looks like it's going to probably be rolling over here. It's a little bit hard to sometimes do this, and this is the same exact thing on CoinMarketCap, but I think the best thing to do is really get the max chart here, and you can start to see again that line of resistance on Bitcoin dominance that we talked about back a few weeks ago. To keep watching that is very important, guys, because we can see here that XRP, we've got Bitcoin Cash coming in. A lot of these altcoins are starting to steal some of that market cap, whether it's really fundamental or not. I know Bitcoin Cash is up on a fork. XRP, whether or not it's really tied to XRapid buyers or not, doesn't really matter. Price is taking over in this case. Market dominance is shifting. So it's an important thing to take into mind for the longer term uptrend. And again, once we see a break on Bitcoin dominance below 50%, I think that's when you've got your confidence signal where you can start taking some risk in this market. But again, you got to decide that for yourself, guys. Alrighty, so now that we've done that, let's go ahead and take a look here at the broader term of markets, do a little bit more detailed price analysis. Again, as always, guys, not overcomplicating things. I'm still waiting to see my 3 to 4 variables in order to get a altcoin uptrend. However, the one thing I'm keeping sure of here is to make sure I'm watching this support line here. If we continue to hold this here, this is going to be a very, very good sign going into the next few weeks, kind of going into the close of November, in my opinion, for crypto markets. I want to see this come back down, seeing as we've gotten resistance at both the 50 and 100 days. I want this to come back down to 6,300, and if we can get a hold for a day or two on 6,300 on this rising line, I got to tell you guys, that will be, let me count them, make sure, 1, 2, 3, 4, 5. So we've already got 5 bottoms here for Bitcoin's price that are at higher lows. If we can get this for the 6th time, again, every time you're building more confidence here in the price. So with rising lows, that's a good sign for market reversal. And not to mention, we're out of the line of resistance. Doesn't really matter how you draw the line of resistance. Some people have their lines more vertical rather than horizontal. Long story short, we've passed the line of resistance for Bitcoin. We're now just pushing sideways. It's a matter of picking up trend off of the rising lows here and getting past some of these moving averages, which really are at a much shorter range here. And what I mean by that, for example, if we take a look at, say, this range here where we had Bitcoin's price down here in June of 2018, where the closing price was in the low 6,000 range, and the 200-day was all the way up here, $4,000 separate from the market price at around 10,000. As you can see here with the red line, the little red number here, you can see it indicated with the line. So we have a much shorter range to break through that 200-day, and that's very important for a long-term uptrend. I mean, you take a look back here at Bitcoin's historical price action. We didn't start really getting towards higher levels until we had confidence that we were over the 200-day. And after that, it was sky high from there. So again, I think it's going to still push sideways for a little while, guys. I think it's much more likely that we don't see any big moves until 2019. So I don't want to oversell anything to you guys, but at the same time, we could start seeing some trading going on, some volume come back into markets, a little bit of speculative nature coming back into crypto, which would be really fun. And I think that's going to be obviously driven by backed Ethereum futures contracts, potentially a Bitcoin ETF, whatever it may be. It could be a variety of catalysts. So let's go ahead and take a look at a few of the other players here. Ethereum, Bitcoin. As you all know, Ethereum got a little bit of a bump yesterday. Still nothing too substantial. I do like that it's holding on the 50-day. Let's hope to see that it does that and it continues to hold. And if that's the case as well, I mean, there's not too much in regards to TA here, guys. I want to see this hold, and I want to see it get above the 100-day. I also want to see the same with XRP. XRP, if you take a look here, I want to actually go ahead and make sure I got on the right exchange here. Yes. So here on Binance, we've gotten above the 200-day actually. If we hold support on this 50-day and don't go below 7,000 satoshis, I'm going to get really, really excited at these levels. So again, keeping an eye on Ripple here. I'm not getting too impatient. I'm waiting patiently to see if this can actually hold here and potentially come back to retest these highs at 9,000. And again, if Ethereum does that, it gets above its 100-day, and Ripple comes back up, or XRP comes back up to these highs, we get some catalysts in the market. This would be really, really exciting for a trade. Right now, I'm not doing too much. Again, remaining patient, guys. Patience and remaining vigilant is exactly what's going to determine whether or not you're a winner or loser in this market. And we're still generally pushing sideways for the moment. And there just isn't enough volume right now for me to justify entering into a trade right yet. So going on here to take a look at a few more. EOS. EOS is still holding on that uptrend line. I really like that I'm seeing this on EOS so far. I've definitely been considering keeping an eye on doing a trade on this for me personally. But again, I want to see it come down, test that low. I'll go ahead and extend the line here. I want to see it come back down here mid-November, test it, and then start to rally upwards past this line of resistance at 90,000 satoshis. And if we can get that, I think we can get a rally up here towards 120,000 satoshis. So really nice uptick there, nice 33% run up possibly against Bitcoin. I want to go here to talk about a few different altcoins that I was watching, some of the smaller ones. I was watching Lisk, for example. This one I had on my eyes for a while, and I did a trading tip video for this. But there's one thing I want to point out, and that is that you want to watch for it to revisit this level here. I'll go ahead, bring up the weekly chart here, and show you the uptrend line that I'm watching, and that is the previous, sometimes hard to do that because they always have that first candle on crypto exchanges that always messes up the chart. This is a long-term support and resistance line. So we can see over here, this is where price was tossed up here, but we've seen it acted as support here, 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 and here. So again, this is the area where I'm not getting fearful on Lisk. I don't know if you're obviously going to be ever getting the highs we saw in December compared it to Bitcoin, but we could very well get an uptick on some of these altcoins, especially in this very low volume market if some big buyers come in. So definitely keep an eye with it retesting these lows here that we saw back in August of 2018. Along with that as well, still recommending to keep an eye on, I said NANO, I meant to type in NANO. I'd recommend, again, watch NANO, see if it holds here on this line of support. It's really just a matter of dragging the line of support out here, guys. It's not going towards any lower levels compared to Bitcoin, and Bitcoin's making higher lows. So the USD has actually been rising on a lot of these altcoins. As we'll take a look here, we can see that it's holding up quite nicely. And if you guys were still interested, I remember I did this trade that I was watching here on Nano. You could very well still keep an eye on this here. My stop was set here, and in this case, we still haven't gotten that just yet. So definitely still keeping potentially open to this. More than anything, before I engage in a trade, I want to see this get above its 200-day. So going on here, let's go ahead and take a look at a few of the protocols. I know many of you, for example, are watching Cardano. Cardano, what I don't like is it's making what seems to be new lows comparatively on Bitcoin, comparative to Bitcoin in this case. Not too stagnant, but at the same time, I want to see this get above some of the moving averages to signal some confidence. And it's still tailoring a little bit below the 50-day. Going on to NEO here. NEO doing the same thing. Seems like a lot of the protocols are exhausted, making newer lows. And to me, that doesn't really signal much confidence. I'd want to see probably a nice little, not flash sale, but a short-term sell-off and possibly come in on the dip for some of these protocols. And again, might need to see it come down to the previous lows here that we saw back in 2017 comparative to Bitcoin. I've been kind of saying that with NEO for a while, but we haven't gotten that just yet. So that's why I kind of avoided trading NEO for a while. Alrighty, and we'll go ahead and take a look. One I really liked that's getting a very good weighted amount of volume per market cap is QDOM. And I'm going to go ahead and get it on a nice exchange here. Go ahead and take a look at Binance. I like the play here because unlike the other ones that are making multiple new lower highs on the price, I'm really liking that this is getting kind of coiled in between the 50-day and the 100-day. And if you get this above there, I think you're going to get a squeeze, and you're going to get price possibly trying to test up, especially if we get a rebound in altcoins towards the 200-day quite easily. As we've seen in the past, QDOM makes some very quick moves in a short period of time. I don't know what really drives it. Could be people buying in on a dip. Could be, again, a mix of market makers as well, guys. You got to be cautious, but at the same time, if the volume's there, the volume's there. So definitely don't want to miss out on any nice price action in markets. I'd say the last two things, the momentum plays that I've been watching, are Verge and I'm sorry, it keeps on loading Bitfinex, which is a low volume exchange. Keep an eye here on a Verge. I want to go ahead and show you guys the kind of play that I have here on Bittrex. This is kind of the general zone where I get bullish on Verge here. So you've got a rising line of support on the bottom, another general line of support here, and this is kind of the zone where every time it's been a decent buy opportunity in the past, so we'll have to see if it'll play out this way again. I would basically do a trade for me personally. If I were to enter in here, I'd probably enter in around this price, and then I would set a stop at 200 Satoshis and then continue to let it ride up from there, raising my stop. Very low risk, potential reward there. And the other one as well that I know some people have asked about is Tron. Tron for me is looking interesting in the sense that it's making higher lows and it's holding above its 50 and 100-day. So it's done most of the work already. So I'm interested in this. Again, just keeping an eye on the moving averages, guys. That's what plays a huge role in market reversals. You can take a look back at like players like Litecoin, for example, a bunch of the major cryptocurrencies. That's usually what you want to look for. All right. So for now, it's just a matter of patience. The market's low when it comes to volatility. It's pushing sideways. We got to be patient. So let's go ahead and talk about this case with the SEC and EtherDelta. Is this the doomsday scenario where the SEC is finally cracking down on all cryptocurrency exchanges? They were lying to us. They're not trying to work with crypto. They're trying to destroy it. No, I don't think it's that, guys, by any means. This was something that was pretty understandable under the SEC, and it again kind of goes towards the fact I've got to give a large respect to the SEC. Whereas a lot of us in the crypto space, again, have a very black and white view on the SEC being very bad and like wanting to just destroy crypto and you know, again, just tailoring up to the establishment. The SEC is actually doing a quite respectable job at tackling cryptocurrencies. They're really focusing in on the only thing that they can enforce on, and that is the worry over securities law. Okay. So they've not only been cracking down on really the bad ICOs in this case, the ones that are really just running away with money, but along with that as well, when it comes to the exchanges here, I wouldn't say so much that EtherDelta was a bad player, but they were doing something that is not only going to spring up an important debate, but along with that as well, teaches the importance of true decentralized exchanges. So Let's go ahead here through the article. So, as of recent, EtherDelta's founder, Zachary Coburn, got charged by the SEC with operating an unregistered securities exchange, as it can be and it can be seen as a shot across the bow on token trading platforms. Now, I want to talk about why I don't feel this is a big fear here. Now, the issue here was that they had a feeling that Zachary Coburn, who is running the supposedly decentralized exchange, EtherDelta, which many of you are probably familiar with if you've been in crypto for a little over, or close to around 2 years, EtherDelta pretty much listed any tokens that were out there. There was really not any restrictions. There weren't any vetting processes where, like, a group of delegates had to say this is not at risk of being a security token. And the issue with this is that if this was a truly decentralized exchange that had no control over it, that might be a little bit different, right? Like if we reach that point where we have truly decentralized scalable exchanges and no third party really controls it or can stop things from happening, that's going to really bring us into some uncharted waters here. That's going to be a problem that the SEC is really going to have to think through. But in this case, there was clear evidence that Zachary Coburn and being the founder of EtherDelta actually had some decent control over it. It wasn't completely decentralized. And because of that, there's a central point of failure, and there's a central responsibility to managing what goes on in that exchange. So as we come down here, for example, this is a really interesting quote from Hinks, who's kind of one of the major people quoted in the article. He said, "It says that he, Coburn, founded a company, wrote and deployed the smart contract, and exercised complete and sole control over the operations. Based on that factor alone, he should have known that his actions would contribute to the violation of the Exchange Act." Now, this basically means that he's responsible for running a securities exchange. Now, they didn't penalize him that much. They made him pay like $300,000. I'm assured he's made a decent amount of money from EtherDelta, in that regard. So I don't think he was hit that bad. And this isn't the SEC, pressing criminal charges or anything like that. They're not like, sentencing him to death. They're just simply saying, hey, you operated a securities exchange. Don't do it next time. It was a pretty laid back pull here, but this is a really interesting point down here. In Heink's mind, this opens up a variety of legal questions for developers contributing to Ethereum and Bitcoin. It's entirely possible that merely writing and executing code could make technologists vulnerable to legal action in the future if they neglect to create limitations for how that software is used. So this really leads to an interesting question that we're going to have to ask in the long term. When it comes to centralized exchanges, it's not so much of a worry because they have teams that come together and decide what tokens get listed and what don't. They are the gatekeepers in that case, and they're going to, I can tell you without a doubt, they're going to defend their decision-making process and make it the smartest that it possibly can be, because they don't want to get caught up in the legal fees of having to pay the SEC or other legal authoritators in the financial sector. What is a really interesting question is what we brought up earlier. What happens when you can build a fully anonymous, decentralized, truly decentralized, and scalable crypto exchange? And there's no central authoritators. There's no one getting in the way from you simply doing peer-to-peer transactions. And again, like I mentioned, anonymously. What does the SEC do that? That is going to be a very, very interesting future. And it's an interesting question to ponder on. It's something that we're going to have to either kind of accept or set parameters around. It's a very interesting topic that we'll have to kind of think about in the future. I think it's kind of inevitable. It's kind of like the McAfee analogy for Bitcoin. It's kind of like when you open up Pandora's box, you're not closing it. So we'll have to see how that kind of plays a role in the future, if it's even possible to really get that scalable and fully functional. Alrighty, so going on here, let's go ahead and dive into traditional markets. I want to spend some time to talk about the $4.3 trillion wipeout in Asian equities and how I personally believe this is still relatively just the beginning. I think that we've got a little bit of pain going into 2019. And I'll talk about where I think that pain is going to hit. So if we take a look across the board here, they have some nice charts in here where you can take a look at the Hang Seng China Enterprise Index. You can see here, again, making higher lows on the indice right here. And if we really go ahead, and I'm just going to dive straight into the indicators here because I think it's best to just bring up the charts. Shanghai Composite has probably been one of the most clear examples of just how bad Asian equities have been hit. Now, this is the Shanghai Composite. It's one of the major Chinese indices. We can see here since the beginning of 2018, where we had a decent rally going into the beginning of the year, we peaked out here around 3,600. and have gone all the way down towards 2,600 at the moment, with the lows of the year being around 2,450. And it looks like, just like how we talked about, I think in the live stream last night, or the last time we analyzed the Shanghai Composite just a few days ago, that this was hitting resistance, which was previous support, and that this was going to continue rolling over. And the thing we need to notify here, guys, if we take a look at the weekly, is that if this is rolling over here from the current price we're at right now, we've got well over another 20% retracement to go in the Shanghai Composite. And this is the same for most of the Chinese indices, as we'll take a look at later on. But as we can see here, again, a decent drop down to 2,000 is very likely. There's not too many points of support along the way. This was really the last major point of support here. And as we've seen, we're making lower lows each time. So I think when we get this down to 2,000, it's more than a 50% correction from the dramatic highs of the 2015 retail bubble in China. And from there, we might be able to find some value in the market. And there's a lot of really awesome stocks that you guys can watch that are traded in China. I'll go ahead and list some of them that I always watch. VIPs, for example, is like an e-commerce player in China, which is rising profitability. Again, you gotta determine for yourself if you guys want to invest in these. I'm not recommending anything, but again, these are some of the companies that I was watching. You've got Alibaba, which definitely might need to continue downward. It's definitely been on the higher end of the PE ratio, but well-respected company. And then there's also a lot of smaller players as well that, again, I'll be talking a lot about in my newsletter in the future that'll be coming out in December in this case. So again, I trade in all types of markets, guys, but I want to go ahead and spend some time talking about the Hang Seng Index as well. This is one that is actually quite predictable in regards to long-term corrections. We can see in the pullback here in 2008, as well as the correction we saw in 2015. A Hang Seng Index usually comes down to this long-term support line that's been relevant since back here in 2003. And it would make sense that it would possibly come back down to this line, because if we take a look at the monthly, we can see that the 200-month is a very steady indicator for when prices are oversold and potentially at a buying opportunity. We've seen both times that it's come back here to this level, that it's a buying opportunity. And if you do another 20% reduction, the Hang Seng Index would come back down to 20,000. So very similar to that of the Shanghai Composite. I think roughly speaking, you can see it the monthly here, and if you take a look at the monthly on the Shanghai Composite, it's going to continue downward. Now, why is this, guys? Why is it that we're seeing the Shanghai Composite and the Hang Seng down? A lot of people would just attribute it to trade wars, and in this case, if it was that, it would be that China's losing the trade war. I think more than anything, that possibly could be a reason that Chinese markets are on edge and that there's a little more volatility. But I got to be fair, really what I think is drilling on the price here, it has more to do with the U.S. tax laws we talked about that changed back in 2017 and the stripping of capital from emerging markets. China had a massive amount of money invested in its economy from foreign markets, a lot of capital locked up in China, and now due to repatriation, a lot of that money that people were hoping would come in to stimulate China's already lagging equities market has now exited. And I think that that's going to provide an over demand for sell side action and not enough supply side for buyers. So in this case, I think it's very, very understandable that we might see this in Chinese stocks. And, you know, if you take a look at other indices, again, when we're talking about the broader market of Asia, I think you've got some room as well to fall in the Nikkei. I think in Japan, you could see a decent correction back down to the 50-week, and we'll have to see where it goes from there. But, you know, I'm not going to get fearful on Japan or, you know, anything like that until you get a break below the 50-week and then make it resistance, the 50-month here, as we saw back here in the past. But again, mostly the focus is on China, and I keep an eye on India as well in regards to the worries of its currency crisis. I think we can pull up the Indian rupee as well. We can see the exchange rate. Oops, sorry, it should do USD INR. There we go. So we can see here that on a month-to-month basis outside of this month, we've been seeing the rupee continuing to devalue against the dollar. So if this really starts to pick up pace and continue the trend here going into 2019, India is the next economy that I'd be expecting a potential recession in, alongside China as well. And those are two of the more well-established emerging markets. So really keep an eye on those guys. That's going to give you a good telltale sign as to where global markets are going to be going over the next few years. So that's it for the video, everyone. Thank you all so much for watching. I thought I'd keep things relatively simple today. Nothing too big going on. But if you guys have anything that I missed in the video, leave it down in the comments down below, and I'll try to get to it as soon as possible. But as always, thank you all so much for watching, and I hope you all have a wonderful rest of the weekend. Stay tuned.